Okay, good afternoon, everyone. This is Joe Henches with Beyond the Chart, and today is Saturday, March 1st, 2014. Happy March, and we'll see if we get another month like this last month. I don't know. Could be challenging. All right, the Dow Industrials were up 49 points yesterday, pushing up through this resistance area. Continue to push up, but not nearly as strong as the other ones have been. We're going to look at this on a daily basis and then weekly and monthly. S&P 500. Interesting thing about this, closed at a new all-time high. The interesting thing here is if I'm working 5 waves since the June low, wave 3 in here was a longer wave and so far the longest wave. And so if that's the case, a lot of times then wave 1 will equal wave 5, or I should say wave 5 will equal wave 1. So if we want to figure out where wave 5 might end, then we take the length of wave 1, which is, I can't remember the number of points, I think it was like 149 points. You add it to the bottom here and you get 1887 as a potential top. Okay, so that's something to keep in mind as a potential target. Also, my Fibonacci projections based on the action that has occurred shows, potential targets, up in here. 1882 and, 1917. But this is a good one to keep in mind, 1887. And we could also always extend. So I think the biggest thing is as long as this thing keeps trading above the 10-day exponential moving average and we're just going to continue to push higher. Now, we're probably going to get a correction at some point. I mean, nothing keeps going up every day, every week. So the NASDAQ had a lot of volatility in here. An outside day closed down, but it wasn't an engulfing bar, okay? And we're right at the upper end of the channel on the daily. If we go back and look at the weekly on the Dow Industrials, there's divergence that's showing on all 3 of my indicators. We've got the demand, the RSI, and the DI plus versus DI minus. We are showing a bearish divergence in here on a weekly basis. Last time we had all 3 like that was back in early 2011, prior to the topping out and then the collapse in the summer when all the government problems were occurring with the downgrade by S&P of our debt and all of that fun stuff. So let's take a look at the S&P. Looking for the S&P weekly. There it is. Okay, similar type thing. Although we've had this correction, we seem to get these divergences. We get a little correction, and don't get nothing much deeper than the 21 bar moving average in here. Okay, so this is continuing to push higher and closing at a new weekly all-time high too. The NASDAQ Weekly right here. The one thing I wanted to know, we are pushing higher, so the divergences are kind of going away here. We're kind of breaking through this trend line here. These last 2 weeks on the NASDAQ have been fairly compressed. And a matter of fact, when I looked at them in terms of the measurements of their range, high to low, they are basically the smallest since these two over here, January 3rd. So really, of the last 2 months of trading, these last 2 weeks are the most compressed, which is an indication that we're going to have some volatility coming in. Okay, the bars are going to get bigger again. Now, who knows whether that means to the upside or downside, but we are continuing to ride the upward channel on this. Okay, let's pop back to the monthly real quick. Dow Jones Industrial on a monthly basis, we saw this swing down. We closed up. We closed near the high of the month. We broke a little bit of this trend line in the process of doing that. We still have this large broadening triangle formation that I've talked about before. The other big thing is look at the volumes, how the volumes dropped off in this entire rally since 2009. That's pretty dramatic, which means this whole move is going up on less and less volume. That's not a strong bullish scenario, which is why I still have a real hard time believing that we're in a major new bull market. This doesn't look like it. And we're getting the bearish divergences on a monthly basis, okay, on all three indicators. Again, on DI plus, on the RSI, they did not go to higher highs, okay, and the demand index, same thing, did not go to higher highs in here on a monthly basis. So that is not positive. Big encompassing bar here, outside up bar on the S&P 500 monthly basis. S&P has a little bit of bearish divergence, some bearish divergence here. We don't have a demand index because I don't have volume on the S&P 500. Clearly we're out in this well above, the highs of the previous 2007 and 2000 on the S&P 500. So we really do have a tale of three different indices. The NASDAQ Monthly, look at this move, dramatic for the month. Way down below, way high, very bullish encompassing bar to the upside. And this close is the highest since this month, which was the month in which the NASDAQ had its all-time high, and that was March 2000. Okay, so it has definitely made a lot. And we've been outside the Keltner channels on the upside for 6 months in a row now, 6 closes. That hasn't happened very often. I think only 2 or 3 other times that I've seen it since 1980. So we're kind of in that rarefied air. All right, now we need to move rapidly over to Apple. Take a quick look. Apple didn't do a whole lot down and up this week. It was down $1.42 on Friday. We're still in a lower highs and lower lows. We'll see if we get continuation. Let's look at the Apple on the weekly basis. And you can see that the trading of the last 4 weeks have been all within that one bar after the earnings report, the week of January, the ending January 31st. Okay, so the 10 is starting to break below the 21 day. If we break this trend line here, I think the downward move will accelerate. If you look, let's look at BIDU. BIDU had a down day on Friday, closed below the 10-day exponential. I thought maybe I thought we were getting an A, B, and then a C, because I think we're into corrective mode. I think we have 5 waves up. There's a potential that we're doing a larger topping in here. And let's take a look at BIDU on a weekly basis. It's a little bit clearer. Okay, you can see that this potential shoulder, head, and possibly a shoulder again, but it's got to break down to prove itself, to show us. Now, when I count 5 waves up, I count 5 waves in this 5th wave of a bigger 5th wave. Now, the thing that gets complex about these, see if you look at these 5 waves on BIDU, up from 2006, 1, 2, 3, 4, and then 5. And a lot of times that 5th wave is more of a abbreviated wave. So the thing that gets complex is look at this corrective wave. Look how overlapping waves can occur, just constantly overlapping versus an impulsive type move. Okay, that's what gets dangerous when you get into this mode, because what I'm looking for is that for this stock to eventually pull back down, probably to this level. It may take a year to do that. I mean, I don't know. It's just because we're on a bigger scale here, looking at it on on a weekly basis. But we're now in, I think, a corrective mode, and so we'll be looking to see how this stock starts to break down. And that's really about it for today. We'll take a look at the trade ideas, kind of review the ones we had from this last week, and see if there's anything new for the coming week, and do that tomorrow and have that video out then. So have a great rest of the weekend. I know we got a cold wave coming in. I think it's coming in tonight. It's supposed to get rain. It's supposed to be back down below freezing again tomorrow. So March is coming in like a lion. That means it's supposed to go out like a lamb. So that will be nice. All right, everyone have a great weekend. This has been Joe for Beyond the Chart.